Ladies and gentlemen, good day, and welcome to the Advanced Enzyme Technologies Limited Q2 and H1 FY2023 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. If you need assistance during the conference call, please signal the operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ronak Saraf from Advanced Enzyme Technologies Limited. Thank you, and over to you, sir.
Good evening, everyone. Welcome to the Advanced Enzymes Q2 and H1 FY23 earnings conference call. I am Ronak Saraf, the Manager Investor Relations here at Advanced Enzymes. We hope you all have gone through our financial press release and PPT, which has been posted in the investor relations section of our website. We have with us Mr. Vasant Rathi, Chairman, Mr. Mukund Kabra, Full-time Director, and Mr. Beni Prasad Rao, Group CFO. Today, the management will discuss the performance and business highlights, update on strategies, and respond to any questions that you may have. As is usual, for ease of discussion, we will look at the consolidated financials. Before we proceed, I would request you all to please read forward-looking statements contained in the PPT. During our call, we may make forward-looking statements regarding our expectations or predictions about the future. Because these statements are based on current assumptions and factors that may involve risk and uncertainty, our actual performance and results may differ materially from our forward-looking statements. With this, without any further ado, we shall commence this call. Over to you, Vic, sir.
Thank you, Ronak. Good evening, everybody. It is my pleasure to join you for this conference call today. I really appreciate you and all of you taking the time and I welcome you all to the conference call for this quarter and half year ended 30th September 2022. I hope you all enjoyed the festive season well. Last few quarters saw an intense macroeconomic volatility across the globe after a rough start of this year. Disruption continued in the business environment, which is elongated pandemic situation and geopolitical crisis. The inflationary pressure sustained on the raw material prices, power and fuel, and logistics costs. The supply chain issues which were going on from last couple of quarters remain unresolved. Despite all the uncertainties, our Q2 financial results demonstrated an improved top-line growth. Although our operating costs remain elevated, which impacted our profit margins. The growth in the Q2 numbers are driven by human nutrition, animal nutrition, which are our fundamental sections, and bioprocessing sections. We hope these hurdles ease soon and we further move towards the favorable business environment. Now, as far as the quarter performance, our top line stood at 1,387 million, grew 15% on the sequential basis. On a year basis, we had grown about 9% in quarter 2. Our EBITDA stood at 397 million, grew about 28% on sequential basis, while it declined about 20% on year-on-year basis. We have experienced a strong growth of 49% in the bottom line on sequential basis, while it declined 13% on year-on-year basis. On the margin side, EBITDA margin stood at 29% and PAT margin stood at 19%. As our overall margin improved dramatically on sequential basis, it remains subdued on the year-on-year basis on account of elevated operating costs. Human nutrition, talking about various different segments. Human nutrition Segment remained highest contributor as usual at 68% in the revenue, grew by 16% on a sequential basis and 2% on the year basis. On half-year comparison, it declined by 4%. Pharma API and biocatalysis in domestic markets and probiotic international markets primarily driving this growth in the human nutrition. Very soft and nutrition business has an impact vitally into nutrition. Animal nutrition, we always say, and animal nutrition segment is one of our future growth drivers and it contributes 12% to the revenue. This segment is continuously improving from almost few consecutive quarters. It grew by 27% on year-on-year basis, 10% on sequential basis, and 19% on the half-year basis. The processing area, bioprocessing segment contributed 14% of the revenue. It grew by 63% on the year-on-year basis, 5% on sequential basis. Food and non-food business grew by 64% and 61% respectively on year-on-year basis. The specialized manufacturing segment grew at 6% and grew by 28% on the sequential basis, while negative 14% and 36% on year-on-year basis and a half-year basis respectively. We are delighted to announce that we invested ₹50 million for 50% stake in Sai Ganesh Enzyme Solutions. The company will have an uninterrupted supply of one of the important digestive enzymes with consistent quality, which will help the company to provide better and regular offerings in relation to the formulated solution for human health and nutrition and food industry. Apart from the ACSL, we have also acquired an additional stake of 4.83% in our subsidiary JC Biotech, which is over and above our existing stake of 55%. With this, I will now hand over this call to Mr. Beni Rauka. He will walk you through the financials in case of subsidiary costs. Sir.
Thank you very much, sir. Good evening, everyone. I hope you all are in good health. The COVID lockdowns may be behind us, but the havoc it triggered in the entire supply chain is still causing pain. As Victor rightly mentioned, the inflation in the input material supported by operating costs remain elevated, but we sincerely hope that things will ease soon. Now on the company's financials for the second quarter 2023, on sequential basis, Q on Q, our revenue is increased by 176 million, 15% growth from 1,211 million to 1,387 million. Our EBITDA is increased by 88 million, 28% growth from 309 million to 397 million. Now it's about 29% of our revenue as compared to 26% in the previous quarter. Profit before tax has increased by about 105 million. This is about 44% growth from 237 million to 342 million, which is about 25% of our revenue as compared to 20% in the previous quarter. Our PAT has increased from 176 million to 263 million, increase of about 87 million, which is about 49% growth and is about 19% of our revenue as compared to 16% of our revenue in the previous quarter. On year-on-year basis, revenue is increased by 116 million, which is a growth of about 9%, and the EBITDA margin has gone up, and now it's about 397 million from 493 million. So there is a dip of about 20%. Profit before tax is decreased by about 71 million, and PAT is decreased by rupees 40 million from 303 million to 263 million. The performance for the first half of the year as compared to the first half of the previous year, the revenue is decreased by about 2%, 43 million from 2641 million to 2598 million. EBITDA is decreased by 414 million from 1120 million to 706 million. Profit before tax is gone down by about 382 million, and profit after tax is also decreased by about rupees 262 million from 700 million to 438 million. I would like to give some reasons why the EBITDA margin is down. So this is because of couple of reasons. The first one, as you all are aware, the impact of inflation on the raw material side, and in addition to that, the product mix also is very important in our case. That has also impacted. And in addition to that, the cost of other inputs like power and fuel is gone up, and there is additional expenses now, because now the things are becoming normal. So travel cost has gone up, lab expenses is gone up, sales promotion is gone up. So all these expenses which has increased, so that has impacted our EBITDA margin if I compare on quarter basis. And in addition to that, if I compare EBITDA margin on year-on-year basis, the major impact, as mentioned earlier, is one, because of the increased input cost, be it raw material, power and fuel, and lab expenses, stores and spares. In addition to that, we have also taken into consideration that in the mark-to-market valuation, which is fair market valuation loss of about 43 million when I compare year-on-year increase in my other expenses. On YTD basis, the EBITDA margin is down from 42% to 27%, mainly because of the lower gross contribution due to the increased input cost, and payroll cost is up by 32 million, and higher expenses, as mentioned earlier, the mark-to-market loss of about 76 million, and in addition to that, consulting charges, power and fuel expenses, lab expenses, travel, sales, promotion activities. So all these expenses are higher than the previous 6 months of the FY22. Now talking about our subsidiary number, AC Biotech revenue stood at 137 million with EBITDA of 14 million, PAT of 5 million during this quarter. This is 9% lower than the previous quarter on year-on-year basis, and on Q-on-Q basis it is lower than by 6%. And PAT margin is lower than by about 29% on Q-on-Q, and on year-on-year basis about 80%. Evox is EBITDA positive, so revenue stood at 48 million, EBITDA of 4 million. SciTech numbers are, top line, the revenue has improved from 66 million to 84 million, but the EBITDA is still negative in this quarter also, and due to higher depreciation and interest cost, the PAT is negative of 8.5 million as compared to 13.7 million during the previous quarter. The sale of our largest product, this is our anti-inflammatory enzyme, it stood at 352 million as compared to 268 million in Q2 of FY22. So this constitutes about 25% of our revenue as compared to 23% in the previous quarter, and the corresponding second quarter of last year it was about 21%. Top 10 customers contribute about 28% of our revenue as compared to 30% in the previous quarter, and for the corresponding Q2 of FY22, 31%. Our B2C segment contributed sale of about $1.11 million USD as compared to $1.62 million during the same period previous year. Our R&D expenses is gone up from 100 million to 148 million in 6 months. And if we compare with the previous quarter, so Q2 it was 56 million, and this time in Q2 it is about 72 million. So R&D expenses constitute about 6% of our consolidated revenue as compared to 4%. So this is what is from my side. Now we will open the floor for question and answer session. The floor is open.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question, may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Nikhil Mathur from HDFC Mutual Fund. Please go ahead.
Yeah, hi. Good evening, sir. My first question is on a comment you made initially that margins are impacted by product mix. Do you mind elaborating a bit more as to what are the key segments that end up performing, and do you feel that in the coming quarters and in FY2022 there can be a reversal on the product mix? Hello?
Nikhil, your voice is not clear. Can you repeat?
Am I clear now? Is it audible?
Yeah. We are audible, but it is kind of distorted voice.
I'll just switch out from my head. Just give me a sec, please.
Is that better, sir? Yes, please.
Yeah, sir, my question was on the comment you made in your opening remarks around product mix impacting gross margins. Can you please elaborate a bit more which particular segments kind of underperforming, which is leading to the gross margin pressure? And what is the outlook for second half FY23 and also for FY24? Do you believe that there could be a reversal in store on the product mix side?
So, Nikhil, usually industrial segments do impact the margins, definitely. And you will see that our international sales, particularly in US, has impacted this year a bit, and that also reduces the margin. Overall, also slightly reducing the margins in those two areas. The cost, we are spending a good deal of money also on R&D. R&D expenditures has gone up by 2%, and more and more will be investing into research and development. So I think your question is what mix is reducing the cost and impacting the cost. That is because of the industrial sales. It's considerably gone up. So mix is always a percentage when we talk about. So when you really look at it, the digital sale is little bit down because of the inflationary pressures right now. So other sales are on a higher side, and those make the mix and match on the margin side. But speaking about like what will be the second half and the next year, we already like communicated earlier also that we are a R&D company. Our research is continuously going on, and as we move on, we will like improve our margins as we put on a quarter basis, and we are working on that. Even if you look from the last quarter to this quarter, our margins are better. So we are continuously working on it. Maybe 3 quarters, 4 quarters down the line, our target is come back to our original markets, EBITDA margins of between 40 to 48%.
Right. If I remember from the last call, the last 2 quarterly results, you have highlighted restocking in the probiotics market, and maybe lower private probiotic sales is what is impacting margins. So any colors you can share on how this market is shaping up from Advanced Enzymes perspective?
So we always talk about that there are 2 types of probiotics. Yeah, long-term market we want to do is our own branded market, right? And that market is like already like improving on the international side. On the domestic side, when we are talking about as a bulk market, those are on a lower side. Okay. So it's a mixed picture at this point of time. But overall, if you really look at it, we have done much better on the pharma side, on the Indian front as well, or ATL front. But because of the inflationary pressures, the nutraceutical sales are down, which will be recorded in the next 3 quarters.
Understood. So when you say that your margins, you are targeting to go back to normal levels, is there any explicit cost reduction that you are building in that expectation, or the entire margin improvement will be driven by better mix and better sales growth? So if you can help me understand what is the drivers of margin there?
It's a combination of all. Like it will be the increase in the sales, it will be increase on the productivity, and it will be reduction on the cost. We are working on all fronts. Like we continuously work on improving our outputs and reducing the cost as well on the raw material side. We are also working on improving the supply, and that will also like increase the margins.
Got it. And one clarification, sorry I missed the number that you shared on NTM losses and other expenses. Can you restate those numbers, please?
Yes.
So the market losses, yeah. So, Rauka, you can.
Yeah. So the fair market valuation loss is about 10 million in this quarter, and in the last quarter it increased to 43 million, and total for 6 months it is about 76 million. So in other expenses it is sitting, overall if you see the other expenses for 6 months it's gone up by about 414. I'm sorry, I'll just come back with the numbers. The other expenses is gone up substantially by about I think if you see the EBITDA, which is down by 414 million. So 203 million is our other expenses increase in 6 months time, which comprises of 76 million of market loss.
Okay.
And if I look at other expenses, the consulting charges, professional fees, expenses has gone up by about 34 million. The power and fuel cost is up by 27 million. And our land expenses is up by 15 million. So this is combination of various expenses increase due to the inflationary trend, as well as as the business is picking up. So definitely a lot of expenses on travel, sales promotion, and a lot of activities of lab related, and a lot of QC related work is to be done, and even like rates and taxes are up because of the increase in sale of our exempted products, so GST expenses is also gone up. So total overall, 203 million is the increase in other expenses if I compare with 6-month number of the previous year.
Right. And pardon me, sir, for a very short-term oriented question in a very volatile environment. With 1.5 months gone into this quarter, do we expect that these other expenses should start normalizing from this quarter itself, or are we still one of the impact of it is visible?
So this is not going to normalize in this quarter at all. Okay, it will take 2-3 quarters.
Got it, sir. Thank you so much. This is very helpful.
No, thank you. Thank you.
Thank you. The next question is from the line of Vaibhav Bhajatia from Honesty and Integrity Investments. Please go ahead.
Yeah, thanks for providing the opportunity. We understand the adverse pressure on the margins because of the product mix. But in terms of product mix of gross margins, do you think that has affected or improved sequentially as compared to last quarter? I'm not asking for a specific number, just a broad commentary on whether our top 3-4 products have seen significant improvement in gross margin or not.
So if you really look at it, our EBITDA numbers is improved on the sequential basis. Our bottom line is improved. Our sales are improved. And on percentage basis also it's improved. That itself says that sequentially we are doing a positive progress.
So understand EBITDA has improved, EBITDA margin is improved. About a gross margin, if I look at your gross margin, revenue minus raw material cost, that essentially has the numbers doesn't suggest so. Shows that your RM cost as a percentage of sales has increased from 22.4 to 24.2%. The gross margin has worsened as the number.
I think there is some increase in the inventory, Dr.
Yeah, so if he's talking about only input cost raw material in terms of the percentage of revenue, I think he's right, absolutely. It shows from 22 to 24% there is a increase in the input cost. But what we are trying to say is that this increased cost is fine. Other than that, if you really see other expenses which are showing some downward trend, because whatever increase has to happen in cost of various power and fuel, employee cost, and lab expenses, most of them has already taken place. So overall improvement in the EBITDA margin. Now the specific question about whether the gross margin on some of the products is gone up or on sequential basis, it all depends where we have higher sales. Because we cater to human nutrition and animal nutrition, food processing. So sometime in a particular quarter, the sale of that particular product, this might be fetching better margin, may not be there. So that will keep on happening. So to give you precise number, it is not possible, simply speaking, for one and 2 products.
Right. Yeah, understood that completely. That's why I was not asking for precise numbers. So, on a broad basis, so if I see your, obviously one source of improvement in margin is basically our scale and operating leverage that we drive employee cost and other costs. If I look at the gross margin, so now from FY 2018, 17-18, your gross margin was always, your raw material cost was always around 20-21% of the sales. So that has increased to 20-24%. That 3-4% margin compression that has happened is what I was trying to understand. That is it Is it due to some of the pricing reductions that you have taken, or is it due to the mix, only the mix change between products that has happened?
Yes,
And
well,
that's where I was trying to understand.
I understand your point. I mean, if I look at, the increase in the prices of the input, raw material, probably the impact is about 1 to 1.5% of our revenue. This is only because, the input cost has gone up. And in addition to that, the impact of product mix, like, you have the products which is fetching higher margin, that impact is probably from, 5 to 4%. So that's what exactly you see the variance in the raw material. This is gone up, say, from 18 to 23%. So it
and it might be like reduced because of some of the output has gone up. So it's an impact which you say is only like 50%, but on an overall basis, the impacts are much bigger.
Okay. Okay, that's it from my side. Thank you.
Thank you. Reminder to the participants, anyone wishing to ask a question, please press star and 1. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Hello. Yeah, thank you for taking my question, sir. And congratulations for recent stuff. We have seen some improvement on the margin side this quarter. So going forward, wanted to understand that this recovery in the revenue and also on the margin side, how we should see the coming 2 quarters. And in past few quarters, have been talking about the higher logistic costs which are impacting the margins. And now since we are seeing that logistic costs or rates are coming down, so that would be also going to help us on the margin front, or it will take some more time to reflect a decent margin expansion.
Well, Rohit, we can see some changes happening in the logistics side. The cost is coming down. We are seeing the pressures on the cost going up, the labor market. Raw material market is somewhat softening. International conditions are mixed, to say the least. And inflammatory pressures are still pretty high globally. So overall, people are still working out their inventories, hold up inventories, and very cautious about ordering. These things will take a couple of quarters more until the market settles down. But we see a trending is changing positively, definitely in the right direction.
Okay. And on the SciTech business, I believe there is some, the numbers were slightly lower. So that actually, once it will cross, I think, 100 billion or a similar kind of range mark on a quarterly basis, then it would be a good contributor in the business side also. So this quarter, as you mentioned, I think it was still, I think, on the negative side. So can you give the number and what is the factors which are actually affecting SciTech revenue growth?
So numbers, Rohit, can you share? So SciTech revenue this quarter is 84 million.
Yeah.
Which is down by 15% on year-on-year basis. EBITDA is negative -3 million and PAT is further negative -8 million. SciTech is going through a very tough patch, rough phase right now, with all the vitamin C and other business is on a lower side. So whether this is the toughest time in the cyclic history, maybe it will take another 2 quarters to really recover.
Okay. Okay. And what kind of inventory built up at the customer level or at the other end you are observing? Because in the post-COVID, we have been talking about a certain pent-up demand for a lot of products, and that has probably led to some inventory stocking also at
It's a mixed picture. Some places, like particularly into the nutraceutical areas, you find a lot of people have a lot of inventory. Into the vitamin C side or other sides, you will see that people are carrying a lot of inventories. At the same time, like some of the products, there are like shortage of the products. So it's always a mixed picture, but it is really hampering us on the nutraceutical side.
Okay. Okay. And one last question from my side. I actually missed out on the opening remark for this new acquisition. So if you can just elaborate on the thought behind it.
Well, it's just a nice addition to our overall concept of total service to our customers with different products. It will enable us to develop many different product lines and service our nutraceutical as well as industrial market. Actually,
Okay. And any number on the revenue side or margin side we can get on for this business?
no, it's not going to be exactly very greatly. I need to check. Rajaji, are you there? I think we missed it. So,
Mukund, give me a minute. I think he wants the number, right?
yeah.
So it was top line of about 86 million, EBITDA of about 7 million, and PAT of about 5 million. That is, the financial year of FY22.
Okay.
Yeah.
Okay. Okay, that's it from my side, sir. Thank you. Thank you. Best of luck.
Thank you. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, please press star and 1. The next question is from the line of Justin Agarwal, an individual investor. Please go ahead.
Good evening, sir. My question is related to R&D expenses. So we've seen a sharp increase during the first half. Could you elaborate more in terms of, are there new hirings and, which segments are they? Are you looking to focus more on as you go forward? And usually in your experience, what type of time frame do you see when you start investing incrementally in R&D? I know it's difficult to answer, but yeah, from your own experiences, if you could just suggest what type of lead lag effect do we see from such type of initiatives? If you could explain all of this R&D in a layman terms, I think that would be very helpful. Thank you.
Try. Agarwalji. Okay. Agarwalji, the R&D is a long-term project always. And we are expanding with more personnel, expansion of the labs, development of various different processes, and obviously it all takes a lot of capital expenditures. We are very committed to continuously grow these R&D sectors. Our concentration is on our segments at this point in time, in the human nutrition, animal nutrition, etc. And they will start providing some immediate results, probably next year. Some of them will be 2 to 3 years down the road. So as usual, we are putting a lot of emphasis and energies into. I'm very excited actually with results which we are having. Just recently we find some results.
And to continue this, sir, so within the human and the animal segments that we have, are these more of incremental R&D on your existing product baskets, or these are mostly being spent on identifying new business lines in which we can focus?
It's a combination of both. In the existing product, we are carrying a lot of clinical trials, we are doing a lot of supporting essays, right? And the new products, we always trying to put it out. So there are a lot of things which are going on. Probably we are working on more than 20 different enzymes, new enzymes. We are working on plenty of different catalyst areas. We are working on a lot of different formulations on the animal feed areas. It's a mix of this. You can't like just pinpoint one this area or that area.
I think that is very helpful. Thank you, sir. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Vaibhav Bhatia from Honesty and Integrity Investments. Please go ahead.
Yeah, thanks for putting the follow-up. So just one request, for this MTM numbers, the expenses that you said, you give it on Concall, but it would be great if these things can be mentioned either in the note to the results or in the presentation, because it changes, sometimes the fluctuations that changes a lot of things. So it would be great if it can be mentioned in the presentation or the notes to the quarterly result.
Thank you so much for your suggestion. We'll take note of it.
Yeah. And R&D costs mostly would be sitting in employee costs, right? It is not large portion of it, maybe 70-80% of it would be in employee cost.
It will be in employee cost, it will be in, power and fuel cost. So there are different, bifurcations. So lab expenses, and again, consulting, because, you have some consultants in research and development too, and you spend a lot of money on technical services, and of course, rent, which is like, premises. So those are, different heads where these expenses are sitting.
But the large portion of it, maybe 60-70% would be in employee cost, or my understanding is not right?
It's about 30%.
Okay, that's right. And lastly, on the side of the business where we have made an acquisition, maybe I'm wrong, but we already had that business in form of payment from other party and in open market, if I'm not wrong. So I wanted to understand what is the additional benefit as compared to what we already had by acquiring this new entity?
In this area, you need to have a lot of control on the procurement. If you want to expand this business, even though like we were in this business from 1968, but recently we were just doing it whatever is needed. If you want to really expand into this business, then we need to have a control on the procurement side, and we need to have a continuous supply of the material. These are the two areas which is like really missing at this point of time. That's why like this acquisition has come into place.
Okay. So earlier, were we acquiring from the same entity, or there is the same? We were procuring from the same entity, or there was some other?
No, we were procuring from different people, depending on the situation.
Okay, got it. Understood. That's it from us. Yeah.
Thank you.
Thank you. Reminder to the participants, anyone wishing to ask a question, please press star and 1. question is from the line of Mr. Goel, an investor. Please go ahead.
Yeah. Good evening, sir. I'm Rajat Goel, individual investor in company since more than 3 years. I have few queries. For example, we developed the immunosab to overcome fatigue after COVID, but we could not take any big benefit from the same. Anyhow, it is some breakthrough, but we could not make a good market of that. And second one is, overall the results are almost in the same trajectory since long time, as I am also from R&D background. So I believe R&D and Enzyme can do miracle, but it is not reflecting very great in the result.
Vijay, thank you for your patience. Glad to see that you are invested in our company for the last 3 years. As you have a great experience in R&D. Not every R&D project converts into blockbusters, right?
Right.
Unfortunately for them, unfortunate for the company, sometimes the immunosafe kind of products which are, people know that figures are good, but the period was short and couldn't take hold of it, so people forget very quickly. But there are some exciting results coming out, which, as I told mentioned before, these things will take little time and sometimes the right conditions, but immunity is one of the very key area, and various other aspects of it. Let's hope that we'll continue to work on it, sure that we can provide solutions of enzymes and enzyme benefits in various different sectors, which are clinically proven. And rest of it, we hope that they will. One thing which it has given us is a lot of knowledge, deep knowledge how to deal with the viruses. This knowledge we were always able to use it in the future. So that's always going to be some opportunity. Because the immunostate, we may not have done it in India because we didn't have any experience. We have done it in India. Yeah. So, excellent references, because once you take the NIH websites, their experience with the competition, which is the impact going into the marketplace.
Yeah, right. In fact, I was reading one of your interview that you told that, okay, you were working on some skin disease trials that are under progress.
Sorry, Rajesh, not clear.
Yeah,
You asked anything?
I read your article. In that interview, you told that you Advanced Enzyme working on lumpy skin disease trials.
Yes, the trials are going on on our side. I didn't have a result as of now, which is
Okay.
But it's again on the virus basis. We are using the same principle of trying to look at it. We can find some solutions.
Okay, so this is only my concern point. Okay. Sometimes we do great work, but sometimes we are not able to do the work that okay.
Or materialize. Yeah. At least like something is there in the future which we can utilize in the future. So knowledge always helps. Yeah, and we always learn.
Right. Okay, sir. Thank you very much.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. As there are no further questions, I now hand the conference over to Mr. Ronak Saraf for his closing comments.
Thank you everyone for taking your valuable time for attending our earnings call. We will keep you all posted for any further updates. I request you all to kindly send in your questions that may remain unanswered. An audio recording and the transcript of this call will be soon uploaded on our website. Looking forward to host you all in the next quarter. Then stay healthy, stay safe.
Thank you, everyone. Thank you, everyone.
Thank you so much.
Thank you. Ladies and gentlemen, on behalf of Advanced Enzyme Technologies, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.